50% buy-to-let rental yields. Yes, you heard me right. I'm telling you about a property which is offering 50% buy-to-let rental yields. It's coming up for sale shortly. We're going to take a deep dive look into it in this video, and I'm also going to share with you where and how you can buy this property if you so wish. Hi, my name's Ranjan Bhattacharya. I've been a property investor and developer for the last 30 years. You may have seen me on Sky TV's Property Elevator show, or you may have attended one of our property events, the Baker Street Property Meet, the UK's largest property networking event. I've been investing in property since 1990, in commercial property since 2001, and welcome to this YouTube channel where I share with you each and every week ideas, tips, strategies, insider secrets, if you like, of how you can get ahead and succeed in property. Don't miss out on any of the free content we put out. Just subscribe and hit the bell icon so you're notified as soon as we release a new video. So in the introduction, I was talking about a property where you can get 50% rental yield. Now let's just put that into perspective. That means from 2 years rent roll, you basically pay for the acquisition cost of the whole building. Now, does this sort of opportunity actually exist? Well, it's coming up for sale at a public auction later on this month. Let's have a little look. So we're looking at the Arrears commercial property sale coming up on the 28th of October. And the property in question is the White Rose Shopping Centre in a place called Arrears. Now, regular viewers of this channel know that I normally talk about, when I talk about deprived and desolate areas, I often mention Hull. But by comparison, Hull is Sandbanks or Monaco compared to a place like Arrears, which is somewhere on the North Wales coast. But anyway, what's up for grabs is a complete shopping centre. It's got a whole bunch of interesting tenants in there, big names, JD Sports, Vodafone, Iceland, Specsavers, the whole gamut of folks, Timpson's, Boots. A lot of people are in this shopping centre. It's up for sale with a price of 1.1 million quid. But the rent roll on it is £500,000, £553,000. So how can that be possible? What's going on here? How can something that seems on the face of it so tantalizing, you've got blue chip brand name tenants in that shopping center building, you've got a purchase price which is only equates to 2 years worth of rent roll. Surely there must be more to this than that. Well, let's take a little look. I mean, I might be wrong. It might be a great deal, and the great thing is, after watching this video, this sale is coming up, so you can go ahead and buy it if you so choose. When I'm looking at a potential commercial property deal, I'm looking at three things. I'm looking at the strength of the existing tenancies in occupation. I'm looking at the relatability of that commercial space to alternative occupiers should the people already in there decide they want to pack up. And the third thing I'm looking at is the repurposability of that space. How easy it is to repurpose that building into alternative uses, and how practical it is from a cost point of view. So let's take a look at this deal and see whether it really is as good as it sounds, or there's something else there to catch the unwary. Now, this particular site is a destination shopping centre. What that means is there's no reason to actually go inside this place unless you're visiting one of those shops. These shopping centres work when you have a multiple of brand names and businesses located in the one place, and they all benefit from each other's footfall. Once you start to have a problem with occupancy, then there's tumbleweed in the whole place, and essentially no one wants to go there. When you actually have a look at some of the detail, you do find that many of the stores in this shopping centre are actually struggling. And some of the brand names in there have already announced that they are closing certain non-profitable locations. And this area, with its relative low prosperity, and we'll come on to that a little bit later, will be a prime place where some of these outlets will be looking to close. Now, during this COVID-19 crisis, of course, some commercial tenants haven't been up to date with their rent payments. The government have brought in certain measures which allow commercial tenants to legally actually fall behind with their rents that are due. Now, many people don't realise this when they look at commercial properties at auctions, but there's a certain sting in the tail which is normally buried in the conditions of sale about rent arrears. So let's have a look at the terms and conditions in this auction catalogue. So I've got the terms and conditions up here, and it's this section that I'm interested in, how any rent arrears are dealt with. So let's take a little look. Basically, it says this: if on completion there are any rent arrears, then the buyer must pay them, whether or not details of those arrears are given in the special conditions. So basically, you're buying this lovely shopping centre, the current owner is selling up, but if there are any rent arrears on the books, which there will be in a shopping centre like that, in that sort of location, then you as the buyer are down to pick them up, pick up the tab for that, in addition to the purchase price. So the other thing I like to do is find out the story as to why a property is being actually sold at auction in the first place. When the property is offered for sale by a company, then you can go to company's house and dig out the most recent accounts and see whether that sheds any light on the story behind why it's being offered in the auction sale. So looking at the company's accounts as posted on company's house, we see a very interesting balance sheet, and this is dated as of 31st of March 2019. What we see here is that in 2018, they had assets worth 50 million quid. In 2019, that suddenly come down to 40 million quid. Looking further down, you can see the assets and liabilities has dropped down to a massive negative of nearly 13 million. Further down in the accounts and the notes section, there's this lovely little note about the company as a going concern. And there's this great little phrase in here which says, the company depends on continued support from the company's lenders and its parent company and fellow subsidiaries. Basically, it's stuffed. So how does that happen, and what does this tell us? Well, basically what's happening here is that this property for sale and all the properties that this company owns are basically commercial assets, and these have been funded on commercial loans, and a lot of these commercial loans are subject to loan covenants, which means that every few years the lender has the right to revalue those properties to see whether they are over-lending on that particular assets or combination of assets. Now here, these properties have obviously been revalued, and because of the current commercial property situation, basically the value has come back at much less than it was this time last year. And that's particularly to do with the rental outlook for these class types of shopping centres. So what this company is having to do is basically do a little bit of a fire sale here to shore up their balance sheet. And that is a position they've been put in basically by their lenders. Now, over the coming months and into 2021, we're going to see this more and more. We're going to see a lot more commercial property come up for sale, basically because a company that owns these commercial properties or a private individual who owns these commercial properties are coming up with these lender covenant issues whereby they're forced to sell one or more properties within their portfolio to shore up their balance sheet. The question you've got to answer is that with all these masses of opportunities coming up, which ones are worthy of you actually buying and picking up because you can do something with, and which ones do you want to completely stay clear of? So going back to this shopping centre in Real, we know a little bit about why it's for sale. We know the vendor doesn't really have much choice but to get whatever they can for it. The current tenancy situation is a little bit of a problem, and if there are any arrears, which there will be in a shopping centre like that, then the buyer is liable to cover the vendor's arrears over and above whatever purchase price is agreed. And that's one of the reasons why that initial yield calculation doesn't quite work out to be exactly that 50%. So the next question, I guess, is, okay, if some of these shops pack up, then can you re-let those spaces? The problem here is that it's a destination shopping centre. It doesn't work if only one or two or a few of these shops are actually tenanted, because it's just tumbleweed all round, and there just isn't enough going on in the local area in terms of prosperity to attract new tenants. So as a shopping centre, it's stuffed. What else can we do with it? Can it be easily repurposed? Now, there are no permitted development rights that would apply to this particular building, but is it worth putting in a planning application to redevelop this particular site? I mean, on the face of it, it looks quite big. There's quite a bit of real estate there, and even car parking for 270 cars. So if we were going to knock down this building and perhaps develop some flats and convert it to residential use, what are the end values? So I've got this tool up here which shows me some square footage data, average price per square foot of flats and houses which are selling in that particular area. And you can see this lovely seaside resort. I mean, I'm amazed at some of our British seaside resorts, that they are such, how can I say, downbeat areas. I mean, if only they had good weather and a few palm trees, then this could be Cannes or Nice or something like that. But it's not, it's real in North Wales. So let's have a look here. You can see here that this is all blue. This means that the price per square foot of properties that sell here are very, very low indeed. If I just put my pin on the map and have a look, I'm getting an average price per square foot of £132. That means that if I'm actually doing some kind of flat, making a block of flats or something like that, that's what you're getting, £132 per square foot. And just to emphasize the point, is first property I looked at on Zoopla in the local area, this lovely 2-bedroom, can you believe it? 2-bedroom flat will set you back 50 grand. So what we're basically saying is that it'll cost you more to build than the flats would be worth. So that's why in this case, the yield figures look so tantalizing. But if you don't agree with me and want to buy it, well, it's coming up for sale at on the 28th of October. I'll even put a link in the description below if you want the auctioneer's details. So we have covered a lot of ground in this little video. The thing is, over the next year, there are going to be tons of commercial properties come up for sale. There's going to be an absolute wealth of opportunity to repurpose commercial buildings, either to alternative commercial uses or to residential uses, or do a combination of both. The thing is, some of these opportunities won't be opportunities at all. They will be laden with traps to ensnare you and drain your cash. And there will be others where you can treble or quadruple your investment in a matter of months. The trick will be, of course, to know which one is which. To help you guys with that, I've got a special webinar this Sunday, and actually on many of the Sundays to come. We're going to spend 90 minutes on a web class focusing on how to profit from this amazing opportunity with commercial properties, and in particular repurposing these properties for alternative uses. Over the next few years, we have a massive oversupply of offices, we have a massive oversupply of shops, we have new permitted development rights which allow these buildings to be repurposed. Join me on this free webinar where I'll share with you some of the things you'll need to know to avail of these opportunities. Click on the link below, it's property-workshop.com, and join me this Sunday evening.